You have the Taiwanese markets up on your screen. It's 1% lower.
Look at where the high for the banks were. Really dramatic coming into last year. So they've been on a relative basis really performing poorly right now.
It is on the risky end of the business, and it is likely to be the kind of bank that's likely to see the stress coming in first of all.
The Nifty is down 170 points straight off the back. That's a 1% crackdown in early morning trade.
What market is trying to figure out, is Fed going to remain higher for longer? If yes, how long?
Globally, we're cautious, and actually, we've been concerned about the rally we had earlier in the year. We viewed it as a bear market rally.
Equitas holders have already witnessed a 40% rise in their own holdings before, after the merger announcement has come in.
The Maharashtra budget has proposed a purchase of electric buses and conversion of 5,000 diesel buses to LNG-run vehicles.
There is not going to be much impact of the temperature being higher for a few days or a week or so in January and February.
The Nifty just below that 17,400 mark.
This will be the first IPO from the Tata Group stable after 19 long years. The last one was way back in 2004 when TCS came out of this IPO.
The benchmark indices are down 1%, Nifty hovering around 17,400. That was the day so far. Hello and welcome to Closing Bell. This is from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surbhi Upadhyay, and in the newsroom, we've got Nigel D'Souza. Afternoon, Surbhi. Afternoon, Nigel. I think this is the day where you want to say, right? Thank God it's Friday. You've got 1 hour to go. And things are looking quite ugly now. This is sharply lower for the markets. The Nifty today has breached the 17,400 mark. The 200-day moving average has been broken quite decisively. And now the level to track will be last week's intraday low of 17,255. 200 points gone on the Nifty. The sensex has crashed more than 700 points. The mid-cap index is moving in step with on the downside, moving in step with the frontline indices. The advanced decline ratio has got 1 stock in the green for 2 in the red. All the sectoral indices are currently in the red. We are roiled by the risk-off sentiment taking place globally. So in the Asian market picture, just a quick recap, Hang Seng was down 3%. The Taiwanese markets were down 1.5%. The others, like the Korean markets, the Chinese markets, also down nearly 1%. And the Dow futures is suggesting that after the steep cut of yesterday, today as well, we could be down by 175 points at open. But you've got the labor data that could move the markets, and that's going to be coming out India time, 7 p.m. So it's going to be an action-packed evening for us as well.
I think we've had enough action for the day and actually even for the week, Reema, but you're right. I think the non-farm payrolls report is something that everybody was prepared for, and we knew that is the big event that's going to ultimately move the needle or shift the needle. But then this whole issue with the Silicon Valley Bank, that came out of absolutely nowhere.
And I think Silvergate.
That too,
also.
that too,
so it's
obviously
a combination of both these two financial accidents in a way.
Yeah, I think Silvergate, I mean, when you're talking crypto, people are still willing to sort of look the other way and say it's a crypto-specific problem. But with the SVB Financial, I think the last of the headlines did not come out yesterday. I'm really hoping we won't get too many more headlines. They will go ahead and raise the equity capital that they're looking to raise. None of their depositors will desert them. Their investors won't desert them. And then we can just go back to looking at the bigger issue in the market, which is interest rate hikes, Fed, jobs report. Because if both of these start unraveling at the same time, then this market has a bigger problem.
But you know what this SVB financial issue has thrown up? The potential losses in the bond portfolio of the larger banks as well, right? Because a lot of these banks got deposits. These were invested in longer dated securities, right? The treasuries. And they were done at a lower interest rate because that's what their interest rate was less than 12 months ago. Now the interest rate has gone up. So those bond portfolios across the board of large banks are sitting on losses. And I think very soon the markets will start, counting the losses. That's done on the flip side, the banks are adequately capitalized. Right? The balance sheet is far stronger, far more resilient, so they will be able to absorb it. But I think this is something that we need to watch how it plays out.
Oh, absolutely. Though, I mean, we shouldn't be painting all banks with the same brush. And in case of SVB, In particular, one of the problems has been that this is one bank that was also sitting on a lot of mortgage-backed securities.
MBS.
And that was seen as, a very lazy sort of treasury management, because MBS was not getting you much. Those were securities that were packaged and the yield was much lower than what just the 10-year started giving you with the pace of rate hikes that we've seen in the last year. And that is why, they decided to go ahead and at least their argument is that's why they decided to liquidate a huge part of that bond portfolio. But people will still ask, was there a desperate need? Why? Why do it at a loss of $1.8 billion? What was the burning need to do that so quickly, create that hole, and then raise fresh equity capital to plug it? So this debate is going to continue. It's not dying anytime soon. But Nigel, I guess it's Friday. Let's try and be optimist. I'm just saying that, at least the morning low was not breached. What it's worth, there's a fight around the 200 DMA.
Well, absolutely. I don't know what more action your ladies want today, but today has been a really poor session, because in the first 30 minutes itself, you were down, and any kind of bounce has got sold into. But if I have to stick my neck out, I think that towards the end of today, we could see a 50-point move on either which direction. So either we end below that 17,350 odd mark, which is the low of the day, or we bounce back and we end closer to around the 200 DMA on the Nifty. And that would give the bulls some bit of a hope that they live to fight another day. So let's see whether or not that happens. For the time being, any kind of bounces got sold into. That's point number one. And the second factor, I'm just looking at the ticker. And on the day when the markets are down by such a large margin, the Nifty is down 200 points, the Nifty Bank is down 850 points odd, you still have select green on the screen. I just saw Balkrishna Industries that was moving higher. The breadth of the market isn't that sort of a day when you have the index taking such a hard knock and the global Q is in a bit of a tizzy. So you still have less than 2 stocks that are declining for one stock that's advancing. So that's not such a bad breadth on this sort of a day. So let's see whether or not we see a bit of a pullback. The Nifty Bank will have to play a role, because that's pulled back 850 points. Maybe it pulls back a little bit, and that's what could help the Nifty. But interesting 55 minutes of trade coming up.
Okay, thank you very much for that. Let's tell our viewers what we've lined up on the show then. Tata Motors IT services arm, Tata Technologies, files DRHP with SEBI. Tata Tech will be the first IPO from the Tata House in 19 years. We'll get you the details on everything that you need to know about the company.
Prakash Diwan and Deepan Mehta will be joining in. We'll talk fundamentals with both of our experts over the course of the next few minutes.
Our technical expert, Mitesh Thakkar, will also be joining in to discuss his top trading bets.
And finally, we'll discuss top portfolio calls with our alpha managers on the show today, Charandeep Singh and Varun Daga of Gurick Capital. All this and more over the next 60 minutes.
How should you position yourself in the last hour of trade? Mitesh Thakkar is now with us. Mitesh, you've been maintaining the bias is on the downside, but we've already lost 200 points. How much lower can we go now? And are you sensing any kind of panic?
Good afternoon. I think, at the beginning of the show, you just highlighted the last week's low coming into focus, which is what I've been looking at, 17,255. I think that looks like a very, possible target which the market could do in the next 1 or 2 sessions, which is Monday or Tuesday. But with today's gap down and fall, I think there is a mild negative bias occurring on the weekly chart, which could mean that this decline could possibly extend for next few days as well, and therefore I think 17,100, 17,000 range could also be visited. So I think the idea should be to maintain some kind of negative bias on the markets, use rallies to sell into. Closer to about the 200 average, which is about 17,430, I think would be excellent levels to add on to your fresh short positions. And until 17,500 is crossed, maintain a negative bias. And I think a good chance we'll see 17,100 levels below that, possibly the next 1.5 weeks. And then there is when I would want to take some profits. On the stock side as well, I think, in line with my view, I have 2 sell calls right now. Bajaj Finserv is a sell with the stop at 1342 for targets of 1285. And HDFC Bank, I think that's one which is damaging the bank Nifty a lot today, but the breakdown looks like we'll have more downside bias. That's a sell as well. Keep a stop at 1605, look for targets of 1550.
Okay, all right. Thanks a lot for that, Mitesh. We'll keep coming back to you, towards the end of the session as well. By the way, on the Nifty itself, you have Maruti that's moved to the high point of the day and Cipla that's moved higher. The problem for the Nifty is the HDFC twins. They are large weights in there, and any kind of bounce is getting sold into. So they'll have to, see a bit of a reversal, because both HDFC and HDFC Bank, they have moved to the low point of the day yet again. But let's move on then. After almost 2 decades, a Tata Group firm, Tata Technologies, has filed for an IPO. Sonia joins us to tell us more about the company. Sonia?
Well, it's a big day for the Tata Group. Tata Motors' wholly owned subsidiary Tata Technologies has filed a DRHP with the SEBI for an IPO. Now, this is important because this will be the first IPO from the Tata Group stable after 19 long years. The last one was way back in 2004 when TCS came out with its IPO. It also assumes importance as this is the first IPO from Tata Group under the tenure of N. Chandra, who took over in 2017. Now, Tata Technologies plans to sell up to 9.5 crore shares, which is a little under 24% of its paid-up share capital. Let's talk a little bit about Tata Technologies itself. It's the IT services arm of Tata Motors, catering to Jaguar Land Rover and Tata Motors products. The company provides a range of services, including IT consultancy, SAP implementation and maintenance, and design consultancy, and has a very strong financial track record. Now, the FY22 revenue growth was the strongest ever at 46% year-on-year. And even if you look at the 9 months of FY23, the revenues of Tata Technologies grew about 15%, profits were up 23%. And if you map the margin profile over the last many years, you'll notice that the adjusted margins have increased from 16.5% in FY20 all the way to 19.2% in 9 months of FY23. But what about Tata Motors shareholders? How do they benefit? The monetization of stake in Tata Technologies, of course, is a positive for Tata Motors. But the Tata Tech IPO, along with the receipts of consideration of the EV deal that Tata Motors did with TPG, will help reduce the company's debt. Tata Motors is now well on track to achieve zero debt on its India business versus about 12,000 crores debt as on December 2022. And with this IPO, we will now have 3 listed Tata Group IT companies, TCS, Tata Elxsi, and now Tata Technologies. What are brokerages saying? Motilal Oswal put out a note where they said that they value about 25 to 47 rupees a share in Tata Motors for its stake in Tata Technologies. Back to you.
Okay, that's really, really interesting. Thanks for all that perspective on this, Sonia. Let's take the conversation forward. Prakash Diwan is joining us. Prakash, good afternoon. I wanted to say happy Friday. I don't know if it is a happy Friday or not. But let's actually kick it off with Tata Motors, right? Very interesting developments coming in over there. Your thoughts and on really what the stock itself has in store, because the last 6-7 months it's in a trading range. You trade the rallies well, you make money, but it stalls at around this 450 level.
Good afternoon, Surbhi. So yeah, Fridays are always happy. So happy Friday to you as well. And you know, I think Tata Motors is gone through a beautiful consolidation in terms of not just its shareholding, I mean, not the share behavior, but also the business itself. So what has it done? It has, you know, started very clearly 2 years back when they forayed into the EV segment. They were the first people actually skeptical whether they will be able to lead that whole EV drive all by themselves when other players were still taking a backseat and just watching on the sidelines. But when the competition between the Mahindras and Tatas actually took off, and Tata started coming down on the price point. So they started off with a 16-15 lakh car, and now they have a 7-8 lakh car as well, which is fully EV run. So that's something which they have done in terms of the portfolio consolidation. They've done a lot of work around the design part of most of their cars. And you've seen very clearly how, you know, the supply side is also been kind of managed so beautifully. Now, this consolidation of the business is something which will start paying results as they reduce debt, and it's a significant amount of debt. So we've seen what happened to Tata Steel when it reduced debt, or to Reliance when it became net debt free. A similar move in Tata Motors is definitely in the offing, is my guess. And the European slowdown is impacting a lot of the high value sales from the JLR stable. I mean, we know that the Velar and all of that, which contributed so much to improvement in margins in 2021-22, is no more there. So there will be some time that it takes for that to come back. But if somebody is willing to be patient enough and keep on adding this stock on dips, I think it will go through what Mahindra M&M went through from the 680, 750 zones all the way to 1300. You know, so you will probably see a very strong move, but it could still continue with a bit of time correction. So is my guess. And of course, this whole thing of Tata Tech offer for sale is something which helps them reduce that debt and actually become net debt free is in that time frame that they're talking about.
Just one follow-up question, Prakash, on Tata Tech. What kind of valuations do you think we should start ascribing? Should it be trading at the valuations of an IT services company like TCS, or higher, like a Tata Elxsi, which does more engineering R&D and it commands a higher valuation premium? Where does Tata Tech fit in the valuation scheme? And secondly, even Tata Tech provides a lot of technology, the software design for Tata Motors JLR, which is one of the key captive clients of Tata Tech. So aren't there a lot of synergies?
No, interesting. And I knew with you around, there would be a question on Tata Tech specifically. But so to answer your questions, my sense is that 20,000 crore valuation that seems to be what I'm hearing in terms of the IPO this thing valuations as derivatives is very clearly telling you that they're trying to position it somewhere between a pure tech services company like a TCS. Of course, TCS is a different pedigree and the scale is very different. And a product or engineering focused solutions company like a Tata Elxsi. It's somewhere in between the two. For the simple reason that they have a lot of, if you see their annual, their balance sheet and their P&Ls for the last couple of years, very clearly there has been a lot of bread and butter business which comes from, very stable maintenance kind of businesses, right? Which they've been doing for implementing across every product launch. So if you see a product launch, there is lumpiness in the revenue which happens every time a new product platform is launched for Tata Motors or for the JLR, portfolio, and that's very clearly maintained subsequently. Where I think they will add a lot of value is once they start giving access to this technology to a lot of other players who are getting into the EV space, so which would not possibly be in India, but it could be elsewhere. So I think it will start doing what a Tata Communication has done to globalize itself with solutions that were homegrown or derived from their home experience and then taken it to the global platform. So if they were to successfully do that, the dependence on this captive market of JLR itself and Tata Motors itself would probably be a little bit of it will come down, and that's something which the market will like. Because if you have revenue coming from other players who are absorbing your technology and your solution, then you have better ROEs coming through, a better margin profile that could improve. So I think they'll probably get their act together in that sense. They need to get out of this Tata Motors stable and start unfolding the potential or unlocking the potential and being on their own. So that I think is what the IPO could probably herald or could signal. But I think it'll probably be valuation-wise, it'll probably be not as rich as Tata Elxsi or not probably as soft as TCS. Or probably closer to TCS in good times. I mean, TCS also has gone through a little bit of a shake-off, but I think Tata Tech will offer some sort of unique, platforms, unique solutions that the market will probably start according some significant value.
All right, Prakash, people are looking for value in the broader markets as well. And we had two very interesting conversations here on the channel with a couple of managements. I don't know whether you track any of them. One is Som Distilleries. The management sounded very, very confident. They're talking about big market share in the beer market. Yeah. And the other one is Relige Enterprises. They as well are talking about unlocking value via an IPO on Care Health. They were talking about, ramping up the brokerage business as well. Any view on either of these two companies? Because, this week itself, these stocks have done well, actually.
That's true. No, I did catch, I missed out on the Relige interaction, Nigel, but I did catch the morning interaction yesterday on the Som Distillery management interaction you had. And very interesting that you picked up something like this because, in the consumption theme where we're seeing a lot of contraction for FMCG, FMEG kind of products, this is one discretionary segment which is continuously grown at fairly decent rate. There has been a moderation even in that, even after COVID when the HoReCa segment, which is the hotel, restaurant, catering segment started off. The in-house consumption segment or takeaway segment actually has not grown as much. But what's working for some smaller players like this is the stupendous growth in market share that they've had. Their products have reached a level of superiority, and I can vouch for this. When I was in Karnataka some time back, and they have a significant presence there, I could see their product fly off the shelf in most of the shops when I visited. And it was interesting to know the kind of recall that it is developed just by the sheer superiority of the product. And of course, they're competing with multinationals like Budweiser, Carlsberg, Heineken, but still they've managed to hold on their own. And that is something which is very interesting. So hopefully, companies like this, which have got their act together on making sure that the product at the right price and distributed well, and manage their working capital around it effectively. And they've done this capex and all of that, which is sounded so confident of. I think it's a great story in the making. There's no doubt about that. On the Religer side, the OTS that I read about yesterday very clearly tells you probably it's a last round of cleansing which was required in terms of, or an obstacle that was needed to be crossed for the company to be able to start doing, something related to unlocking the IPO, the valuation from the health insurance business. And it's a fairly remarkably positive business. There is element of private equity there. So there are investors who have been patient enough, whether it's Kedara Capital or, some of the other late entrants, the Burman family, all of them have put in a lot of money into this business. And there could be some sort of semblance of value unlocking that will come through. But, the time factor is something which you need to live with. You really don't know whether it's going to happen in the next 6 months or it'll take the next 2 years. So that is the only issue. But it does seem to have bottomed out in terms of whatever ifs and buts it had in terms of the restructuring that has been underway for the last 2 years.
All right, got that. Prakash, stay on. We have more questions for you. Do have to take a break for the time being. And as we take this break, here's a quick programming reminder. On the 14th of March, CNBC-TV18 will host what will be India's largest summit on gender parity. This takes place in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the world. The event starts out at 4:30 p.m. on the 14th of March. And of course, you can catch all the action live right here on CNBC-TV18. Okay, just getting back to the screen, and no, it's not looking any prettier. 17,360, 370. We are still struggling, very close to the lows of the session, so not much changing. Prakash, I want to talk to you about this big bank sell-off in India. I mean, it has nothing to do with the worries that are playing out across Wall Street or across Silicon Valley, but I don't know, I mean, people have chose to just go out there and dump bank stocks. What do you make of it, and what would you buy, since there seems to be a sale of sorts that's underway?
So, Survi, somehow this SVB accident of sorts has got kind of underplayed, if you ask me. I mean, there's been not much of news flow around it, except for the call that, the CEO of the group, Greg Becker, had, the 10-minute, it didn't last for beyond 10 minutes, actually. And if you listen to the call or the transcript, you'll realize that all he's doing is imploring upon his depositors and investors to continue supporting them the way they've done over the last 40 years of the bank's existence. So, and he doesn't have a solution to kind of assuage anything of the issue. The reason is, this whole problem which Rima and you were discussing at the start of the show, it's something which has the potential to snowball into something bigger. Because the moment the startups start getting strapped for money and that money is locked into some deposits in these banks, there's a run on the bank. And that's what Silvergate has actually given a very clear indication or precursor to what could happen. If that were to happen, it's going to lead to so much of job loss, chaos, defaults, that the recession that we are afraid of in the US will actually get accelerated. So this is just symptom of the malaise that was there when free money was distributed, and now you have 500 basis points interest rates higher than that. So it's a huge mismatch in too soon a time or too short a time frame. And that's something which people are worried about. The banks that you see, the losses in PSU banks in India, which you see, it's 11% from the start of January of this year, is primarily because of the FI exodus from most of the banks. Even the private sector banks, the heavyweights like HDFC and all, I think today you'll see a huge FI exit number, and which might not be evenly matched with the DIA number. That's exactly where the market is struggling. So I think if you have to buy, you have to kind of look at some of these banks that you buy with the medium to long term and hope that the recession fears don't cascade or snowball into something which is much more global. So I think it's just a money flow or a liquidity flow issue at this point in time, but I hope it remains that and gets sorted. Otherwise, you'll probably see lower levels and you'd probably start finding better value at that point in time. But I would give it a couple of more days for the dust to settle, probably this weekend, come Monday, and things could look very different.
Right now, at least the higher interest rates have hit the frothier part of the markets. That's the tech startup space and even the cryptos. Wanted to get your thoughts, Prakash, on NTPC. This is a stock which this week has rallied 4.5%, and it's been doing well over the last couple of days. We know the January and the February power sector demand has been strong in double digits in anticipation of a pickup now that, the summer is, really hot. But, markets tend to price things in advance. With the up move that we've seen in the stock over the last couple of days, has it priced in tactically strong performance over the next 2 quarters?
No, I think, Rima, if you see the kind of promise that the business has, given that it's one of the largest power producers and it continues to do it at very efficient scale and price, I think there's still much more to translate into gains. I mean, it's just that NTPC has had a checkered past in the in terms of volatility and regulatory environment not being very benign. But this time around, when you see even the Section 11 invocation by the government very clearly tells you that it's serious about making sure that there's no power shortages that bring the factory output to a standstill. And if that continues, NTPC will actually end up clocking such great revenue growth at very decent margins as well. So I'm very sure that this 180 or whereabouts that it is, it'll start looking like decent value if you price in the fact that there's another 30-35% kind of an upside for the rest of the next financial year, and then that could mean that the re-rating will continue much further than just this last 2 weeks of this sparkle that you've seen. So there is much more to go, more legs to this rally, I'm sure. You'll probably look at about 210, 215 as a very achievable kind of a milestone in the next 2-3 quarters.
Okay, all right. Thanks a lot for that, Prakash. As you said earlier, irrespective of markets, it's going to be a happy Friday. So wishing you a good Friday ahead as well. Well, we have some news that's flashing on the screen, and HUL has got a new boss in there, Mr. Rohit Java. Mangalam joins us to give us his first take on this appointment. Mangalam?
Well, this is an appointment on expected lines. There were reports that there were 2 contenders for this post, and now it is official that Rohit Java will be the new boss of Hindustan Unilever, and this is with effect from June 27, 2023. He's been appointed as the MD and CEO for 5 years. Remember, one of the triggers of the stock for this year was the impending change in leadership, as Sanjeev Mehta superannuates. The important part, however, is that, Rohit Java, as most Unilever leaders have been Unilever lifers. He joined Unilever in 1988 as a management trainee. Thereafter, he's taken, place, he's been positioned in various important places in Unilever as well. One of the most notable of them being he was the chairman of Unilever China, where he actually transformed the Unilever China business. And as a market, China retail market has been much bigger than India. So that sort of aggression is something that we're expecting here as well. And with his background in digital technologies, etc., everyone is looking at him integrating the traditional Kirana, traditional marketplace model in India with new age future-looking technologies. So with that, it is basically a step in the right direction for Hindustan Unilever. I'll be watching out for the strategy that he makes, especially on the digital front, to take the company forward. For now, it is a big overhang on the stock gone. Now we have clarity on who leads the company for the next 5 years.
Okay, all right, Mangalam, thanks a lot for that. Well, let's move on then, and let's get chatting with Charandeep Singh as well as Varun Daga, co-founders at Girik Capital, who join us on the show. Good afternoon, gentlemen, and thanks so much for joining. And well, we've got your presentation that comes in normally, but I don't have the stocks. Actually, I don't have the cash levels as well that you're currently sitting on. So help us out with that first up. Have you raised some cash? What kind of cash levels are you sitting on? And given the kind of global markets that we are in, what would the approach be from here on?
Hi, Nigel. Thank you for inviting us. So yeah, we are at about 22% cash level. It's been like that for a few months now. And I think we are not, we don't take cash calls based on market directions, but it's just a matter of our process. And we are always in the hunt of finding new ideas as new sectors emerge. And we are looking for that. So as we find ideas, I think as of now, we are seeing some sectors emerge in capital goods and many companies which are into industrials, and also we are We're allocating money there slowly, and but we still are pretty conservative and going extremely slow because I think we still need to see some emergence in terms of leadership.
Got that. Varun, stay on. Let me bring in Charandeep into the conversation as well. Charandeep, what a start to 2023 it has been, right? The market has thrown so much at money managers, right? From interest rates and the way they're rising to what's obviously happening now, as a fallout to some of these US lending institutions, to the Adani saga over here. It's been nothing short of a roller coaster. So as we've navigated some of these events, what are the top things that you're keeping in mind? Are you, for instance, is this a year where you're sticking to, let's say, local themes over global-facing ones? Are you looking at unleveraged plays? So in terms of broad strategy for the portfolio for 23, what do you have in mind?
Thank you. Thanks for having us on the show. I think you raised a lot of relevant points in that, in what you just mentioned. I'll try to highlight some of those and how we're thinking about them. I think you're absolutely right when you say that there are global issues. I think we're not realizing how grave those global issues are. You just saw with the SVB bank the issue that happened overnight. When you go from 0% interest rates to 5 or 6% interest rates in 1 year, which has happened in the West, there's bound to be several accidents because the cost of capital has just gone through the roof. So the way you discount cash flows will obviously change. So far, India has been fairly insulated for many, many reasons, mainly because we have a lot of domestic flows, right? So whereas foreigners have been sellers in India, probably because they have better opportunities on the fixed income side globally, where you're getting and seeing phenomenal yields after many, many years, money will naturally find a safer place where there's better risk reward. India, like I said, was insulated, but, it's only to some degree. Valuations do reset. Ultimately, fundamentals are the driver for markets. So one thing we have going in India is that we have earnings growth and earnings momentum on our side. And that's offsetting the fact that valuations are correcting very gradually. So I think one has to be very clear that if you are going to make money now, you have to have a strategy that's different. You need to be in stocks that are, relatively undiscovered, which have superb earnings momentum, and a long tail earnings tail and earnings growth, which is not necessarily priced in or well discovered by the market. So essentially, you need to find something that's a little more ignored. And as portfolio managers, that's ultimately the quest.
Charandeep, but since you have about 22% of your portfolio in cash and you're still waiting to deploy it, are you expecting a very sharp decline in the markets? Because even if you go down 1 to 2%, at best the stocks that you are liking, may fall another 5%, right? What is the entry level that you are awaiting to deploy this cash that you're sitting on?
So, I think there's a few thoughts. I'll just think out loud and I'll speak out what I'm thinking. I feel that with every passing day, we are getting a little more spoiled for choice. It's becoming more and more of a buyer's market. So, and this again has happened after a long time. There's also the emergence and data points available on many new sectors. And, if you go look at the history of markets, it's always different sectors that lead the next bull market whenever it comes. We're seeing very early signs of the sectors that are partaking or that are showing us relative outperformance and strength and solid earnings momentum, which we think is not necessarily priced in, is more on the manufacturing side, right? So capital goods, manufacturing, power ancillaries, several export sectors that do very basic level manufacturing, be that in auto ancillaries, be that in power ancillaries. So there's you have a large segment of the market that has not been very well covered by the sell side and largely underowned by the market now for many, many years. So we are taking our time. It's a buffet out there. There's a lot of choice. You need to make the right bets. And I think that's the process that we are going through at present.
And if you're willing to slug it out, maybe the buffet is getting more and more delicious. But the last time you gentlemen joined in, I think you all mentioned 5 stars, one of those companies that you all added in the portfolio. We spoke to them earlier today, and the management sound confident about the way ahead. 30% AUM growth they're talking about. They're talking about NIMs holding in 13-14% odd. So that's something that you'll share the last time around. But could you share any fresh idea that you'll have taken into your portfolio? You'll have added a couple of companies. A couple of stock-specific names, if you could give us.
We've added, I think.
Yeah. Go ahead.
You hear me?
Yes.
Yeah, we've added REC, sometime back, probably a month ago. And I think, our thought process was that, in fact, we have NTPC and REC. So, looking at the power sector and the growth in the power sector and some regulatory changes that are helping the industry. And, we also feel that globally value is doing better. So, especially if you're getting value with growth and strong dividend yields, we feel it's a good place to, protect your money and also grow it.
Okay, so REC, that's a new addition. That's an interesting one. Charandeep, can I ask you to please expand on this theme? Because the point is completely taken. I mean, if there's one person or one entity that's consistently investing, it is the government of India. But, the problem is that stocks like, let's say, an ABB, Siemens, you're not getting them as cheap as where they were 2-3 years ago. So how else are you playing this CapEx cycle revival theme? And, maybe some ideas, some names, if you could discuss from the portfolio, that would be great.
Yeah, we have been playing this theme for some time. When we sort of felt like this is something that could add value to our investors, we started researching this whole theme about a year and a half ago. And, I can name the names that we have in our portfolio that, center around the CapEx theme or manufacturing or ancillaries, if you will. We have names like ABB, which you mentioned. And again, please don't construe this as advice to go out and buy these stocks at this price or that we are recommending them because, we've done our own work and we have our own thought process around them. So it's not to be construed as advice. It's just a guideline as to some of the stocks that we hold in our portfolio. But our portfolio does have a very large cap goods and manufacturing bent to it. We have names such as ABB, REC indirectly. I mean, we like financial services as a theme, but we may not like the money center banks as much as we like some of the ancillary names like 5-Star or REC, where we think we can add value to the portfolio. We have names like NTPC. We have names like RHI Magnesita. We have names like a contract manufacturer like Sirma. We have a gearbox manufacturer like Elecon Engineering. We have a power EPC company like Hitachi Energy. We have a EPC contractor which focuses on power called Power Mech Projects. We have a plethora of names. We have an auto ancillary, but going into specialized fasteners for windmills, etc., called Sundaram Fasteners. We have several names. And they're very different, and they're all driven by very different end market drivers. But the interesting and underlying theme is, they know how to, they're in sectors which we think are pretty sunrise and which have growth ahead of them. And, sectors that are not necessarily over-owned by the market or over-modeled by the market, if you will.
Varun, in the auto and auto ancillary space, Sundaram Fasteners is a stock that you'll own. Any others which look attractive to you and why, if you could explain the rationale for holding it in your portfolio?
So, we thought that what they're doing on the windmill side, they also got a very big order on the EV side. So I think the company is very, very strong and they have a capability to really grow. So, we felt that the management is rock solid and there are a lot of triggers that could help the company, in the future. So that was one reason. Apart from that, we don't have anything on the ancillary side. What we liked about Sundaram is it was moving from one segment to, just from fasteners into industrials. And, what we've seen is as companies do that, they tend to get better valuation, and also they're increasing the scope of the work that they can do. So that is what we found pretty interesting.
Okay, all right, gentlemen, thanks so much for joining in. Charandeep as well as Varun, appreciate you joining in, giving us your thoughts on the markets. And we discussed a couple of stocks, as you all said, with due disclosure, that you are not recommending any of them. Wishing you all a good evening ahead. By the way, when we're having that chat with both those two gentlemen, the markets have recovered a little bit. We're holding above that 17,400 odd, so that's pretty good news. And the Nifty Bank is 100 points off the low point of the day. Then HUL appointment, new boss at the top. Well, the market seems to have liked that. The stock has moved well into the green, and Titan's the other one as well. That's seen a bit of a spike up. We'll slip into a short break. You come back, we'll get in our technical experts. They'll give us a couple of picks. Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the Indian markets have seen a bit of a recovery, but take a look at a couple of stocks in the broader market. Max Financial, I think that one's calling for our attention. Pull up the intraday chart on that one. It's seen a sharp spike up. And Shree Cement, against the tide, Shree Cement has seen a good bounce. Just pull up the intraday chart out there. That as well has moved up in a rather good manner. And if you're booking tickets, you'll know the reason why. Interglobe Aviation, chock-a-block. You have rates as well that are moving up. Interglobe Aviation spikes to the high point of the day. Good time to get in Mitesh Thakkar. Well, Mitesh, a bit of a bounce is what you've seen from the low point of the day. So what's the call on the index? And also fill us in with your picks.
Yeah. So on the index side, there's some recovery. But I think, the overall structure isn't very good. And today's gap will always come into play if we get a pullback on Monday. So therefore, nothing much changes except for the fact that we have not really tested 17,255. I expect Monday or Tuesday to be the day when we retest those lows. And eventually, I'm looking for a breakdown, though there could be some bounce back from those levels. That is an important pivot. And in line with the index view, I have two STVT calls. Emphasis is something, which is near the day's low. That's STVT with the stop at 2051. Look for targets of 2015, 2012 on the downside over there. And IDFC Limited, after a long time, seems to be starting some kind of a corrective decline. So that's a STVT with a stop just about 79.20 and a target of around 76.20 can be looked at.
Okay, those were some trading ideas. Dipan Mehta, Director of Elixir Equities, is now with us on the show. Dipan, is Electra Green Tech a stock that you track? It's a manufacturer of EV buses and insulators. They'd gotten into a partnership with Reliance to manufacture hydrogen buses.
Yeah, good afternoon, Dima, and thank you for having me on your show. We are not tracking it as yet, but it's so much in the news that maybe now it's worthy of being tracked. The only issue is that they're sitting on massive order book position, no doubt about that. But the actual execution is very important, and so far that we're not completely convinced on that. And it's not that the stock is exactly available at attractive valuations. So first of all, you have the execution risk, and you have very high valuation. So these are the two factors which kind of keep us slightly cautious on the stock. But no doubt, I think the way the order wins are coming through, at some point of time it will get interesting. But as I said, I think this is a new business, even for Electra, even for all their customers as well. And being conservative investors, we'd like to see the exact outcome of these orders before we can start investing in a sizable manner in such a company.
Okay. By the way, I remember Nigel telling us at the start of the show that he's sticking his neck out, saying you'll either get 50, 60 points on the upside or perhaps on the downside towards the lows of the day. The bulls will be very happy to see that the move, I think, is more on the upside than on the downside. There you go. That's coming up over there. So 172 from the Nifty. The low was 17,324 to be precise. So, Nigel, not too bad, though the bank Nifty, I don't know what's with the banks.
Even before we came on the show, I told you that, right? When we were having the chat on our digital platform, what moved the market, that the bulls will have some hope if we can end closer to around that 200 DMA. And as we speak, we're just around 9 points away from those levels. So it's a decent recovery from the lows. Maybe the bulls will feel all is not lost. You didn't want to have an ugly last start of trade. So for the time being, that's playing out pretty well. So I think if you're a bull, you'll be a little bit happier with the last 10-15 minutes of trading action.
Absolutely. Deepan, I guess whether you're a bull or bear, you'll just be happy this day and this week is wrapping up, right? So much is going on. You tell us. There's been a bit of a mini sale on the Lal Street today. Have you been punching in buy orders? Have you bought anything today?
No, Survi, I think we're just watching the screen and it's getting so unpredictable. 2 days ago, you thought that, the markets, would rally further from these levels. And then today we have this kind of sort of a correction which is in place. So it's very difficult to call the market, and there's hardly any news flow. So we are following what's happening overseas. We all know what the problems are: higher inflation, higher interest rates, and that's having an effect on equity valuations. And even the FI flows are not steady. Some days they are positive, some days they're negative. It's not that it's one-way street even as far as those flows are concerned. And on the whole, I think we all know that the earnings season is good, and corporate profits will remain strong. India's economic prospects are great. All of that has got a bit priced in. But the real wild card in this thing is inflation, interest rates. And I don't think people have a handle on that, which is why markets trading at these levels and perhaps moving sideways with a slightly downward bias. And give it a few more weeks and we will have a more clear picture. But for the time being, I think it's just better to just wait and watch. Anyway, earnings season is coming up. So better to see what the managements have to say and what the quarter has gone by before making any fresh decisions.
It seems for the time being, tiptoes it is the Nifty gradually making its way to that 200-day MA. Hi, Deepan. Deepan, before we let you go, I want to do your view on the logistics space. And a couple of stocks, now we talk about the markets being jittery. VRL Logistics, one of the stocks that popped up on my radar. That's up close to 20% in the last 1 month or so. Your view on the logistics theme and VRL Logistics, if at all, the stock currently as well as at the high point of the day?
Hi, Nigel. I think VRL Logistics is available at very attractive valuations, and they have done some restructuring and sold off some of the non-performing business as well. From that point of view, I think it has become attractive. And road transportation per se, I think, is picking up well because economic activity is doing better, and with so many highways and the kind of road construction which has taken place, the four-lane highways certainly benefit road transportation companies because they're able to turn around their assets, which are their trucks, much faster. And on the whole, I think logistics should do well, but there are very few stocks one can really buy. I thought Container Corp was a great story, but that was more on the basis of privatization move over there, but that has gone into cold storage at this point of time. Other than that, I think there's all cargo logistics, which has done well, but we don't get the kind of visibility in earnings as far as that company is concerned. It's a complex business model as well. So intuitively, while logistics should do well in an economy like ours, which is growing, but when it comes to identifying the specific stocks, I think we are coming up with nothing really major where one can start to put the money to work.
Okay, do stay on, Deepan. Need to slip into a very short break, but here is a quick programming note. Our weekend special Editors Roundtable is coming up at 4:30 p.m. today, and let's get you a sneak preview on what are the big themes that are on the show today. US banking stocks have seen their worst days since 2020 in last night's trading session. What led to this sell-off? What impact is it having on the global markets? We'll get you the global setup. The focus will also be on the metal space as brokerages stay bullish even though global slowdown fears persist. Tata Motors IT services arm Tata Technologies files a DRHP with SEBI. Tata Tech will be the first IPO from the Tata House in 19 years. We'll get you the details on everything that you need to know. We'll also put the spotlight on the big block deals. There have been deals worth $4.3 billion in this quarter so far, and the quarter is not done just yet. How many more can we expect? A detailed explainer coming your way. So don't forget to tune in into CNBC TV 18 at 4:30 p.m. today.
Welcome back. We are all set to close down the day and the week. And you'd have to say that in the face of the kind of news flow that we've had, this is not such a bad performance. In fact, India has outperformed a lot of the key markets around the world. The Hong Kong Hang Seng, for instance, was down 3% today. A lot of the European markets have been nursing losses to the extent of about 2-odd%. So given the context and everything that remains very, very uncertain, you could actually argue and say that the Nifty bulls have managed to put up a pretty decent fight. Of course, it is the Nifty bank that was taking it on the chin, and that's where the bulk of the pressure really was. It's quite clear that in this market, the themes where buyers are gravitating at lower levels are two or three. One is the auto space. We've seen that play out in stocks like a Maruti or a Bajaj Auto today. Tata Motors, of course, had news around it with the IPO of their IT services arm. There's a consistent buying that comes back in a lot of the power stocks, power/capital goods. That continues to be a theme that people want to work with. And you are seeing that in a Power Grid or an NTPC. A lot of these stocks on a day like today have managed to move up from the lows of the session. Some green on the screen as well, as you can see on them. And then there's, of course, the select FMCG and consumer. I mean, Titan, some green on an ITC, little small specks of green out there. But that's pretty much where the good news ended. The bulk of the market was dealing with this huge pressure and uncertainty, and banks the most. HDFC Bank, SBI, ICICI Bank. You have biggies like Bajaj Finance, Reliance. A lot of these stocks on the way down on the screen today. Even HDFC is losing about 2%, Axis Bank 2%. So I guess, Rima, we need to see if this reaction that we got on financials, whether that people think was a little excessive today, because we're not directly linked with what's happening in Wall Street, on Wall Street or in Silicon Valley. But I guess this is the one sector that really felt the heat the maximum today.
Yes, absolutely. And just to that point about the Indian market performance vis-a-vis peers. So week to date, the Nifty is closing with a cut of 1%. Hang Seng has lost 6% this week. So the outperformance is not, relative outperformance is not just today, but it's played out through the week. And the mid-cap index is actually going to go home with a very minor green tick for the week. So the mid-cap index is up 0.1, 0.2%, and the small-cap index is absolutely flat. There goes the bell, and the Nifty's last traded rate is 17,418, which means it's below the 200-day moving average of 17,427, but not by a whole lot. And we did see the markets recover, especially in the last 30 minutes. From the day's low, there has been a recovery to the tune of about 90-odd points. But the big headline is it's a sharply lower close for the Indian markets, a cut of 1% on the benchmark indices. It's the global weakness which has taken the Indian markets down today. But there is an important and a very crucial data point that world over everyone will be watching, and that's the February non-farm payroll data. That's the jobs data. Is it going to be as hot as the January number? It's going to be a decisive input into the FOMC made. So we're going to wrap up on Closing Bell, but don't go anywhere. Our Friday special, Smart Money, comes up next.